Asset allocation, what is it? Asset allocation is a practice of balancing risk to create a smoother ride, if you will, throughout the investment period so investors stay invested. Warren Buffett very famously said, just put all of your money in the S&P 500. Better yet, if you're investing dollar cost averaging, meaning putting money on a regular basis, many people do that through their 401k, put it all in the S&P 500 and buy an ETF, buy one that's really low cost and then just let it ride. No reason for asset allocation. He's right historically. If you take a look at the numbers, it would have worked beautifully for most people. Here's the problem. And why we use asset allocation is because we are emotional people. And money is one of the biggest areas that we carry emotion. So asset allocation creates a balance to smooth out some of the ups and downs. What am I talking about, the ups and downs? Most of you as parents will remember 2008 and then 2009. 2008 was one of the worst years we've seen in our lifetime from a market pullback. The S&P 500 was down 38.49%. So let's just call it 40% down. You've now lost 40% of your money. And if you went with Warren Buffett, which was great advice, do you have the stomach to handle the roller coaster that goes down 40%? And then by March 9th of 2009, just literally 3 months after it just closed, it was down another almost 27%. So if you put those two together, and I was there working with the clients, a lot of people are saying, get me out. I can't take anymore. I'm going to the sidelines. Well, where did 2009 end? It ended up 23.45%. So if you had bailed out on March 9th when it bottomed out, and if you were there, you know you didn't know that was it was bottoming out. It was a terrifying looking into the abyss experience. But by the end of the year, there was a 50% difference between where it was and where it had ended, meaning it was down 27 and it ended up in 2009, 23%. That's a huge swing. So what happened if you had just taken your money to the sidelines? You would have had a much smaller amount of money for the goal that you were saving for, whether it be retirement or college education. And now on that lower amount to get the money to grow again is much more difficult. But if you went to the sidelines, you weren't alone. A lot of people did. And this is why asset allocation is very important to talk to our kids about. Asset allocation is really balancing three things. Number one, your goal, meaning what are you trying to accomplish? With your time horizon, how long until you're going to spend that money, and your risk tolerance, meaning what are you really willing to take risk-wise? And it's important to know yourself and teach your kids to know themselves. Often people will say, especially during really good times, no problem with risk. I can take a lot of risk. And what happens is when things get really bad, as they did in 2008 and beginning of 2009, they jump out and they hurt themselves financially in a very, very deep way. So balancing those risks is really balancing three broad asset categories: cash, equities, stocks, and fixed investments or bonds, and striking a balance that you're comfortable with. A moderate growth in income is about 60% stock, 40% bonds. If you've ever worked with an investment advisor in your 401k, often they'll have lifestyle funds that balance it for you, taking more risk while you're younger, meaning a higher stock exposure, and lowering that as you get closer to your goal, whether it be education for your children, meaning 529 plans will be more aggressive when your kids are little, and they will become more fixed or bond oriented as your kids get close to college, reducing the risk. And 401ks, if you have a 401k and you're invested in a lifestyle type fund where they do the rebalancing for you, often when you're younger, there's a higher level of risk, more stocks or equity investment. And as you get close to a retirement and you're going to live off of that, it usually shifts more to an income perspective. If you're doing this on your own, you have to understand the three broad categories. And teaching your kids, just let them know there are three broad categories. And the most important way you make a decision is based on your goals, your time horizon, and your risk to balance those assets. Inside of those broad categories, as I've spoke about when I talked about stocks and I talked about bonds, there's various types of investments even inside of those broad categories. But really asset allocation is the balancing of risk. And that's the easiest way to talk to your kids about it. Use the roller coaster example you've heard me talk about because kids get it. Often I'll even say to clients, we're strapping in together on this roller coaster and I need to know what you can take. And it's okay if you throw up on my shoes sometimes, meaning you call me going, oh my gosh, I'm scared. I just need to know when you're gonna jump out because I don't wanna take more risk than you are comfortable with, because if you jump out at the wrong time, you can do permanent damage to your portfolio. I've told my kids that story. They understand that's how I assess risk with clients. So it's a great conversation to have. And you may even want to talk to your kids about how much risk you take. Asset allocation, incredibly important part of teaching your kids about investing. Have a great week.